Well, welcome to Bees with Rich. I'm Rich, editor of Under the Radar Report. Welcome back. Once again, people, a subscriber has stepped up to the plate. And the result? Well, it's pretty exciting. The result is this little Tasmanian number, which I think looks pretty slick on the marketing side. Bruny Island Beer Company's Farm Ale. Well, let's crack it open. Let's do it. Also, the first time I've ever done a bottle opener on this show. Wow, breaking new ground. Let's have a taste. It's pretty nice. Boy, that's actually a good drop. Now that we're free, I look forward to travelling down there and trying some more. I think they do wine, spirits, everything. Pretty excited this week. It's been a pretty good week for Under the Radar Report. We've made a quick 10% on Helloworld Travel, like in a few weeks, after news that international travel's finally opening up after 2 years. That is actually big news for the whole market. You know, imagine the transition from, back into the services economy. So that's going to happen. But we've also made 50% on the gaming side. And I'm not talking about Aristocrat, I'm not talking about the pokies. No, we're not talking about pokies. We made 50% on PlaySide Studios so far. It spiked 30% on an NFT transaction. And then there's a 22% we've made, a quick fire 22% in a few weeks on AGL Energy. That 2021 laggard. And just as it happens in this week's issue, we cover 16 of them. So these are stocks you probably won't have heard of, and there's definitely a great deal of potential. But, a lot have come out of the great 2021 IPO boom. And they're on the speculative side, as I've been intimating. But that's what we're here for. Used to that, to gauge the risk versus reward. Definitely on the reward side there. So these companies are across the spectrum, but a lot of them are technology based. So we've got a battery. We're talking about technology in battery production, med tech, digital tech, and an ethical food producer. Not so much on the technology side, but like some of the names: 4D Medical, Rhino Med, Alpha HPA. Altech Chemicals. This last one's pretty exciting because they could have found the holy grail in incorporating silicon with a lithium-ion battery. Now, Peter Chilton, our resources guy, tells me that normally this leads to explosion. So that's the whole thing is, it's quite volatile. Let's hope ATC can lead it, that can be led to an exploding share price. That's the kind of explosion we're looking for here at Under the Radar Report. But the second point from all this market movement is that you need to be hunting for value. That's why I mentioned AGL before. What does value mean? Well, that means earnings that you can see and a strong balance sheet. And in the discriminate selling, some of those stocks have been hit hard, but AGL was being disrupted. But the point is that you can find value, with stocks that look like, okay, they're not interesting companies because they might have lost their footing. And we saw value appearing late last year in BHP, Rio Tinto and Fortescue. And I guess a lot of that mystery is resolved in this week's Blue Chip, where Peter Chilton delivers a must-read analysis on the iron ore price, which makes for fascinating reading. But speaking of which, I think the same sort of opportunity exists now, and wait for it, in the big banks. They've been producing some big results this week, and what's clear to me is that these stocks have been priced like they're value traps. But looking at the money they're producing, I can honestly say they are not value traps. I mean, after all, they're giving bigger and bigger dividends and capital returns, or capital management, in the form of buybacks to shareholders. So let's go through them. Let's go through it. The king of banks, CBA. Well, CBA perennially looks overvalued. Lots of these analysts and I think, oh, it's too expensive. But it's overvalued for a reason. It's by far the most profitable bank. It has a huge... Banking is all about scale. This company has it with a huge mortgage book. So basically, competition or no competition, this bank is impressive. And what impressed us as well was the inroads they're making in business banking. So they're growing profits pretty well there, and that's a good read through to one of my favourites over the recent years, NAB. But as I said, recent years, this was previously my favourite, but it's had a pretty strong 12 months, so it's actually outperformed the two laggards. Who are they? Well, I'm sure you've guessed. Westpac and ANZ. Like, both these stocks have had, huge problems. I mean, I'd need a whole nother probably week to go through them. But they're both the best value according to our model. Both are going for a reduction in their cost base to 8 billion, and they're both struggling on that front. But the reason I think Westpac is the best value is because they've got bigger volumes on the mortgage side. They're like one of the legacy retail banks alongside CBA. ANZ's more on the business banking side. So if there was one bank I'd buy, it would be Westpac. What's up for next week? Well, reporting season's only going to ramp up from here. So, basically we've got, lots of companies that are coming through, 150 companies, and we've got reports on lithium and uranium to look forward to. There's always lots happening in the markets, and right now is a great time to be dipping your toe in. So let's have another toast to Bruny Islands Farm Ale, and here's to travelling to Tasmania. Until next time, it's Beers with Rich.